Okay, hello everybody, and welcome to our IBD meetup, Madison Heights and Livonia Group, Michigan, for November 2022. We have Raja, myself, Keith, Francisco, Henry, Taljit, Ron, and Cookie. Cookie tonight is unable to participate. She has family matters that she's attending to, so she's unable to attend us. She's in our thoughts and prayers. So, uh, okay, this content is for presentation purposes only. It's not a suggestion to act on any of these trades that you're going to see. It's only just a starting point that you might consider in your own research. So enter at your own risk. The market status as of yesterday, which the bulk of this material was prepared yesterday. So 11/13/2022, we are in a confirmed outlook of confirmed uptrend. We have one distribution day on the NASDAQ, one on the S&P 500. So we are right here, November the 14th. Pretty much clear sailing. Our last meeting, we was in a correction for the up until the Friday. Then that Friday, it was an uptrend, under pressure for about a week, and then back to confirmed rally. October, our IBD 6,000 accumulation distribution buckets, we had a low of the A's of 392. That has since changed to 836. So Friday, there was 190 added to the A bucket, and the E bucket, notice it was reduced by 362. So it's down to 458. So, and it was a month ago, 1391. So that's really flip-flopped. It's almost inverted completely, but it's a pretty strong market. And here's our Dow Jones Industrial Average as of the past weekend. These dashed lines are our recent meetings. So August meeting, notice how it hit the 200-day and then it fell down. Our September meeting, you can see that. And then our October meeting was pretty much a bottom, and then it's been advancing ever since. And it recently, the Dow Jones had plowed through the 50-day, the red line, and then the black line, the 200-day, and it poked through it, poked back down, then it went back up, touched it the other day last week, and it's pretty solidly above it. So time will tell. Keep in mind this August meeting. That's why I put this up here. This was our meeting. It pretty much touched it. We were feeling great how it advanced, and then it just reversed and went lower. So keep that in mind. S&P 500, similar story. That was that August meeting. We were feeling great, and then it hit the 200-day and it declined. Now, the S&P 500, since our last meeting, it has crossed through the 50-day, but it has yet to reach the 200-day. So we'll see what happens there. And here's a blow up of the S&P 500. So it hasn't hit, it's quite a distance from the 200, but it is solidly above the 50-day. And lastly, the NASDAQ, which our August meeting, it did not touch the 200. It came, pretty much trended all the way down. And it seems to be treading water, even though it is above the 50-day. So here's our stock charts relative rotation graph. This is last month, 10/18/22. the leading stock or the leading index or sector was XLE, which is the energy. UUP, we added that a few months ago, which is the dollar index. It was pretty strong. And then XLY, which is the utility. XLY, yeah, that's the utility. So that was last month. This month, XLE is still dominating. It's the strongest. The dollar is declining somewhat, even though it's still in the leading sector. This green sector is all the leading sector, so it's still leading. XLI is industrial. XLY utility, or pardon me, consumer discretionary, and XLF, that's your financial. So that is your leaders right now, according to this relative rotation graph, stock charts. Julius D. Campanera is the creator of this Excel spreadsheet. If you Google or YouTube hit this name with stock charts, he does have several videos. He's very interesting to listen to. Here's our IBD 197 subgroups rankings. We have both the 3 and the 6 month sort. And the 3 month sort, energy, oil, utility 4, medical 4, telecom 4. And then the 6 month sort is, I mean, it's just pure energy, oil, utility 13, medical, agricultural, food 2 each. So it's pretty much energy, oil. Here's our S&P 500 VIX. The VIX, it's said that when it's low, it's time to go. In other words, sell. When it's high, it's time to buy. So it seems to be heading down to the low. So there's lower volatility, which when the volatility is high, you know, these are your 500-point days, up or down, and that's actually the time to buy, according to the VIX. So just keep that in mind. It seems to be heading down to the recent lows of roughly 20. We're at 2373, so we'll see what happens there. Okay. Oh, this is okay. So this is a bar chart 100 stock. This is not necessarily something I wanted to show tonight, other than this base pattern, side-by-side pattern, pretty much horizontal to one pattern to the other with a small gap in between. And you see how powerful that is. It's roughly $20, and it's recently as high as $39, well, nearly $40 in a matter of, no, I don't know, August, beginning of August. So roughly August, September, October, November, that's 4 months, a double. But it is very powerful pattern. This is a bar chart 100 stock, but I was just pointing out this pattern. Here's a blow up of it. You can see a nice tight, pretty much April, May. So call it a 8-week base, and then June, July, August, maybe a 10-week base, pretty much parallel, very close, and maybe a 2-week gap in there or a 1-week gap, and then boom, it's just off to the races. Okay, so here's our last month's, right from this meeting, last month's stocks, November 2022, who's the winners. So we had our best stock was SLB, which was Schlumberger. This bar here is roughly the last, or the meeting. So that Schlumberger, we had a 30% gain. Number 2 was IBEX, 19% gain in that time period. And then we had CLMT, which was roughly a 15% gain. And we had NBIX, which was roughly an 19% gain, or pardon me, a 12% gain from there. So you'll see some stocks mentioned here tonight, at least are historically, we're pretty good at beating the index. The index over the last month was 11% gain, but the dollar, notice the dollar is starting to maybe peak. I don't know. We'll see. Cookie, as we said, Cookie has personal matters, so she doesn't have any stocks tonight. Into mine, let's see, we have CPRX, Catalyst Pharmacies, subgroup 10 of 197, which is medical, biomed, biotech. Nice tight pattern. Actually, this was a base on base. You can barely see this one over here, but there was maybe 2 months in between, and then it took off from there. So roughly $9 up to 17, and now it's pulled back and it's forming a base again, and it was down pretty good Friday, but it was down 5% Friday. But this is it's a pretty strong stock. Actually, nice tight price pattern. It seems to be hanging out around the 50-day, above it, below it. Now it seems to be above it. 99 relative strength. As I said, it's subgroup 10 of 197, so it's in a strong thing. 15% to the pivot, so it's not out of buy range yet, so you're not overpaying for it. Okay, one thing I wanted to point out on the fundamental analysis, I've been studying Warren Buffett's, how he's picking them, and two of the things I'm looking at is he uses PE. This is an actual one of his bigger holdings, Occidental Petroleum and Taiwan Semiconductor. I understand he just purchased this brand new purchase today, Monday, per his release of his statement. Anyways, notice how I've noticed his return on equity is roughly twice of the PE ratio. So he wants it to be profitable amongst other things, but this is the two that I really key on. And 17.8, that's for the Occidental Petroleum. And then return on equity, 30%, and earnings stability, or PE ratio 13. So it's roughly half. The PE is half of in other words, the PE is not twice as much as the return on equity. It's half of the return on equity. So that's kind of one of the things he uses. So keep with that in mind. With that in mind, CPRX, Catalyst Pharmacy, that is return on equity 31%, PE ratio 17. So that's near 50% of that. SMR rating, accumulation distribution, A, B plus, composite rating 99, earnings per share this year 30% up, next year 20% up. Number of funds is pretty stable. No A plus funds own it, and it looks like something you might want to take a look at. No debt, or actually it's saying NA, so they're not saying that. Management owns 14% of it, so this might be something you want to put on your watch list. Another one I have noticed this week is EQT Corp. That is in the, let's see, it's in the oil and gas integrated, 45 of 197. So it's in the top group, oil. The thing I'm noticing on this is we have our cup with handle, then we have our base pattern, and this is roughly 2.5 months long. and again, 2.5 months over here. And then we have that gap in between. So we have base on base, 97 relative strength. It's coming down. On the down days, it is lower in volume. So this seems interesting to me. It's 18% to the pivot. So you're not overpaying for it yet. And it seems to be the 50-day is heading towards possibly the 200-day. We have the 50, the 21, and the 10 very close to converging in there. But it's a top stock and a top group, so who knows? Fundamentally speaking, we have, let's see, we have now, okay, so now this does not work with what we just talked about, the Warren Buffett approach. Return on equity 3%, so it's making a profit, but it's barely making a profit. To be honest, the PE is 14, so that's not ideally what Warren Buffett would be looking at. Debt 45%. It does pay a yield 1.4%. The SMR rating B minus 96. It's not horrible. It's not too bad. Up down volume is 1.4, which is pretty good, pretty strong actually. But the thing that really sticks out at me fundamentally is this earnings. So this year we're going to go 337% increase. Next year it's going to double on top of that, 130%. So this oil is just a powerful group. And one other thing, there is an A+ fund that has it, the Fidelity Contra Fund, a brand new position as of September of 2022. So it's something you might want to take a look at. Another one we have is KOS, Cosmos Energy. So this is a bar chart 100 stock, very small. It's a $6-7 stock. However, it's got the same characteristic. It's got the cup, no handle, but it's got a cup. Then it's got a double bottom, which it's forming 9% to the pivot. So you're not overpaying for it. But the base on base, it's pretty much horizontal. It's not lopsided. Actually, the double bottom is lower than the cup, but it's not up extended too high. The double bottom, really, if you look at the volume, it's all seems to be lower volume, even though there are a couple of pocket pivots in there. So 97 relative strength. The 50 just crossed the 200, which that is negative, so that is not a positive. But it also seems like a lot of the lines are converging here, so might be something you want to look at. And let's see. So here we have, well, they're not profitable at all. They're not making money. Return on equity 0. Price PE ratio 8. But the earnings, so the last 6 or 7 years, 0 earnings, negative earnings. This year, $1.16. Next year, they're going to go up 46% on top of that. So even though, notice the debt is very high, almost 500% debt. So keep that in mind. No A+ funds own this. Let's see what else we got. Okay, CHK, Chesapeake Energy. So that is that is a number 8 of 197. That is the oil and gas international exploration and production. That is, no, pardon me, that's incorrect. That was KOS. Chesapeake is number 12 of 197, oil and gas, U.S. exploration and production. Okay, so again with the oil, again with the cup and base, gap in between, small gap in between, pretty much horizontal. It's right at the top, so it's like less than 3% from the pivot. So we're not overpaying for it. Again, with the riding the 50-day, very tight riding that 50-day, 96 relative strength. Pretty much the blue, it seems to be the blue bars are higher than the red bars. So the red bars are below the volume moving average in general. There's one above it, there's one above it, there's one above it. But in general, they're below it. The blue bars they seem to be a little higher than the red, which is positive. Actually, that's above it. So pocket pivot, pocket pivot, pocket pivot, and that's within the base. So it looks kind of interesting. Fundamentally speaking, we have return on equity. I would check this with another source, like maybe Yahoo Finance, but they're saying, this is MarketSmith, they're saying 635 return on equity and PE ratio of 7. So, but they're, very profitable. Oil's the place where you want to be. SMR rating, accumulation distribution, composite rating, all very strong. Up-down volume 1.2, very strong. Yield, 2% yield. Debt, 40%, not out of control. 0 A+ funds own this. So might be something we want to look at. We got another one. Let's see, Halliburton. Everybody knows Halliburton, right? Halliburton is number 2 of 197, oil and gas field services. So that would be your drilling, right? Setting up the rigs, working for Exxon and all the others. But again, with the cup, big cup, looks like maybe a handle here. So cup with a handle, gap in between, seems to be pretty much horizontal. It's not, in other words, one is not way above the other one. So it's pretty much horizontal. 96 relative strength. Looks to be pretty strong blue bar volume over here. The red bar volume is less than the blue bar. So this is pretty strong. 96 relative strength. 3% from pivot. So it's not too far above it. It is above it, but it's not too far above it. Halliburton, fundamentally, return on equity 17, PE 22. So that's opposite of what Warren Buffett's looking at. He would rather have the PE less than the return on equity. Even though the up-down volume, very strong, 1.6. The yield dividend, 1.2%. Let's see. SMR, accumulation distribution composite, 99 A's and B's, so that's very strong. Debt, 136%. Let's see. This year, 92% earnings per share increase versus last year. Next year, 40% above this year. So it's going, they're just going to be spending more on the drilling end of it. They're like an outsourcer. They handle the slack that the big oil companies can't handle. And by the way, there is a A+ fund that owns this. That would be Fidelity Contra Fund. Even though, to be fair, March of 2022, 1.35 million shares. September of 22, 0.58 shares. So it looks like they've halved, or pretty much halved their shares. So they have sold some of their, or half of their shares. And on the weekly chart, it does have a blue dot. So an IBD blue dot, meaning the blue dot is meaning that the relative strength on a weekly chart is higher at a new high with a pattern. I think there is another stock with a blue dot that we'll see later in a minute here. We got another one. We got OVV, Ovintin. Ovintin is subgroup 8 of 197, oil and gas, international exploration and production. So this is a forming in a base. Looks like the 50-day and the 200 are running pretty parallel to each other, and it's starting to take out 9% to the pivot. One thing to note on this here, this goofy looking pattern over here, this is what we call an ascending base, and it's said to be the midpoint of a run. So if we call this, say, let's call this 40, that would mean this thing is still got to go to, it's still got a ways to go. So it's not really parallel though, but it is base on base. There's a large gap. It's not as clean as the other ones, but OVV, the fundamentally speaking, return on equity 29%, PE ratio 8%. Okay, here's our Warren Buffett. That's an ideal candidate for him, I think. SMR rating, accumulation, and composite, all very good. A, B minus 98. A yield 1.7%, debt 70%. This year, 85% earnings per share versus 2021, and next year, 62% on top of that. So it looks like they're going to have they're having a good year, and it looks like they're going to have it's going to continue for a while, hopefully. No A+ funds own this though. So, and notice the 70% debt. So that may be something to keep an eye on. And I think this is our last one. Phillips 66. Okay, here's our blue dot. So that's like a Market Smith. It automatically generates that, but that's a very powerful signal. But again, with the Phillips 66, so here we have our base cup with a handle, but notice how this is not exactly parallel. This second base is slightly higher than the next one, but it's still a base on base. The cup, 2/3 of the way through the cup, that's where you'd want to see your pocket pivots pretty strong, and you can see how they act. They kind of 2/3 of the way through the pattern, there they are, and there they go. Nice price increase. It's riding the green and pink line, which is the 10 and 21-day lines. It looks like the 50-day did cross the 200 negative, but then it popped right back up through it. So it's close to it, but it seems to be pulling away. But the other two lines are surely pulling away. This was Friday, so it had a very good day Friday. 96 relative strength. And fundamentally speaking, so it's having a great year this year. Let's see, 13% return on equity, PE 6. So that's, I mean, well, 6 and 6 is 12. So that is half. So that, I guess this would be a Warren Buffett one here, but it's kind of weak. The 13 is a little low. I don't think he buys them that low. SMR, accumulation distribution, composite rating, BB99, very strong. Debt 68. Yield 3.5%. So this is a pretty big stock. Let's see. There is an A+ fund that has it, Fidelity Contra Fund. new position in March of 2022, 0.17 million shares. June 0.61, and September the same, 0.61. So it looks like it's a fairly new position this year for Fidelity Contra Fund. And I guess oil is the place to be, though. I don't know. We'll see how long it lasts. Okay, so, well, this is from last month, but U.S. Treasuries, they are paying pretty well for the, this is a time, here we have our time, 1 month, 3 months, 6, 1, 2 year, all the way up to 30 years. Then we got our interest rate, or the bond coupon, which is 3.25 up to roughly near 5%. And this is it. So you can get them directly through the U.S. Treasury or through Schwab, Fidelity, and I'm sure all the rest. Actually, U.S. Treasury, $100 minimum, and Schwab and Fidelity, it's $1,000 minimum. So 0 commission. So I don't have many bonds, but I do have the I bonds and the Treasury notes, 30 and 60 days as of this year. So I'm a rookie with these bonds. Oh, this is new for IBD. I've been getting a lot of these. It's a new service they have. I want to say it's $6 a month or something, but it's just a new feature they have, and that's it. So as always, we say to follow the IBD market direction rules, which were in a confirmed rally, track distribution days, buy the best stocks, buy at proper buy points, and take profits regularly and repeat. And with that, thank you very much and have a happy Thanksgiving to all.
Great job, Keith. Nice presentation.
Okay, thanks.